Welcome back to Your Average Investor. Today we're going to talk about Palantir, PLTR, and see if it's worth purchasing or selling right now because it's just had earnings and it's down about 5% compared to where it closed at the end of the day today after a little bit of a back and forth. Now we're hover right around 23.75 and it's an interesting dip. Now, if you're not familiar with Palantir, let's just go over briefly what the company does. You can go to their website, palantir.com, and try to get some sort of information about what the company does by exploring their different products and what they do. Another great way is just to go to finviz.com. Scroll down once you've typed in, so you type in your company that you want to see the ticker of right here, PLTR in this case. Get out of all the ads. And then right down here, it will give you a little blurb on what the company does. In this case, Palantir engages in business and building deployment software platforms that serve as central operating systems for its customers. So it creates custom operating systems. One of the big things with Palantir is they've gotten a lot of government contracts recently, and people think that's a pretty big deal. That there'll be a big push in the government space over the next several years. So a quick analysis on their financials. Cash per share 1.65. All right, that's pretty low, but not too low for a growing tech company. And their income, they've done, let's go sales, 2.23 billion in sales, and their income's about 10% of that, not bad, 209 million. Market cap right now is 56 billion, so their market cap is about 26 times their sales. And then, of course, multitudes higher than that of their income. That puts their earnings or their P&E at a very high number of 279. Now, beyond that, you've got a short float of like 4%. Nothing serious there. This is interesting, though. It's almost 40% owned by institutions and 15% owned by insiders. So over half the company is owned by a combination of institutions and insiders. And wow, look at this. As I'm talking, it just continues to move down. So let's take a look at some of the news, some of the chatter that's happening. If you ever use Thinkorswim, this is a great way to get a little bit of quick news updates on what's going on. So we're going to look at some of this Palantir chatter and see why this keeps coming down. Looks like we're going to be about 10% down based on close. Yeah, right now 10.22% down. So their revenue was 650 million versus, it was right on basically what the estimate was. Let's see, Palantir guidance that's what we just read. Okay, Q1 government revenue. Let's see, following stock. Yeah, so it's just revenue guidance, revenue beat. So they beat their earnings estimate, but they guided lower than what that's what it looks like. Is they guided lower than what the market was expecting, and so that's why this dip happened. So it's really interesting, right? So it's like, all right, Palantir, maybe it was priced into perfection, and that's why it's had this crazy lurch. Like if you look at last earnings report 3 months ago, they jumped from about $17, the next day $21, climbed all the way up to 25. And since then, they've just kind of bounced between 25 and 20 over and over. And then again, right before earnings today, up to 25. And now we're right back down to $23 a share. We'll call it $23 a share. So not in a bad position. Their growth seems promising if they're continuing to hit their targets, even though they have softened guidance moving forward. Sometimes that's just a technique that savvy CEOs will do when they know when they want to more or less protect their stock price a little bit. So they'll guide down and then over the next quarter work to overperform and overbeat, and that way the stock will surge again over the next earnings report. But in this case, we're down about 10% right now, right? So like let's say you're buying in the after hours, you wanted to buy shares at 22, 23 bucks a share, whatever it's going to end at here. Is that a good price to get in on from a technical perspective? Well, let's just zoom out a little bit. Now, Palantir, they IPO'd via an SPAC or a SPAC, and so that's why you see them at $10 a share, and then they came way up here to 45 bucks a share, bounced around for a long time between $20 and $30 a share, and then had a big dip down. This is when the whole market was selling off here, right? And everyone's like yelling, the sky is falling, and everyone's gonna lose all their money and whatever, and bottomed out around $6 a share, and then sat there before this recent earnings where it moved back up. And what's interesting is it seems to have moved back up right into the same range as a couple of years ago. Now I'm going to take out this like crazy section of where post IPO they just surged off of a lot of hopium, I suppose. So we can just look at this, right? So here's their floor back then, and I'll put their ceiling. We'll put it here at like 27.5. So this is kind of where they were bouncing way back a couple years ago, between 20.75 and 27.5, just up and down and up and down and up and down. And then sold off, came back up, and then they started hitting against this ceiling again, and then maybe establishing a new floor here at about $15 a share. So I'm going to add another line here at about $15 a share. That seems to be maybe a new floor. And after testing this ceiling a few times, strong breakthrough here. And this was the earnings breakthrough, right? So if I turn your attention down here, look at this. That's the earnings breakthrough. Strong breakthrough on earnings. And then rejects at the ceiling again, comes back down, bounces on the floor, comes back up, and now we're sitting, right here at 22.5-ish per share. So we're not quite at the floor yet, if you want to call that the more recent floor. And that's probably where I would look at getting an entry. Now, based on what I'm seeing here, I wouldn't be surprised to see this price move back up a little bit or continue to move down. But what I would like, if it were me entering personally, if I liked the stock and I wanted to enter from a technical analysis perspective, is I'd like to enter somewhere here between $20 and $21 a share, right around where this new floor is. And I would probably look for that entry sometime in the next week and sometime in the next several days. Now, if, for example, that doesn't happen and instead Palantir starts building a base here at $22 a share, and I like it as a long-term stock, then sure, that'd be a good place to start entering because, you're not that far down from a potential floor here. But if the 20 floor breaks, then we're probably going back somewhere between $15 and $17. And it's just going to bounce around there. I doubt we see $5 a share again unless, barring huge market crashes. But it seems like Palantir's gotten a solid footing for itself. Good government contracts, good revenue coming in. So, this maybe was the only opportunity to buy below $10 a share that you'll ever have again. So to me, it doesn't seem like that big of a risk. If I'm thinking about this from a trading perspective, maybe what I do is I buy now and I set my my target exit somewhere between 26 and 27.5, and I set my stop loss here around $20, right? So on the downside, I could lose about $3 per share, and on the upside, I could gain $4 to $5 a share, depending on where I was setting my my exit at. Now, the other way to do this, of course, is sell covered calls. Selling covered calls is one of our favorite things to do. I'm going to make these a little bit bigger so we can see them now. So let's just say, and these aren't going to be accurate numbers because the options data doesn't update in after hours, which we're in right now. But let's just say that I bought 100 shares right here around $23 a share, and I was hoping to sell, and let's just say, it stayed around $23 a share and by market open tomorrow. Then I could look at selling some covered calls. Now, all of these are going to have their premiums drained a little bit because they're just due to what used to be the unknown earnings call. Now that unknown earnings call is known, and so implied volatility is going to go down. And so the call 23 tomorrow is not going to be worth $300 or $360. Maybe it's, and this is 30 days out, maybe it's worth $200. And in addition to that, of course, Palantir dropped from 25 down to 23. So it's dropped $2. Which means that we're going to have, for sure, you're going to have some delta decay. So delta of about $1.20, and then we'll have some implied volatility decay as well. But that'd be an interesting way to protect yourself from some downside is purchase 100 shares here around $23 a share, sell covered calls on it. So personally, I don't know enough about Palantir to know if I like them as a long-term company. I've read a lot about, peripherally about them, and they sound like an interesting company. I just don't know where they fit into the larger picture of things like Apple having its iPod moment or its iPhone moment, whenever that was in the early 2000s, where it's like, oh wow, this is like, I can see how this could become part of mainstream consumer culture to own an iPod or to own an iPhone, a smartphone, and of course it did. And if you track Apple's stock performance since then, it's been phenomenal. Palantir, I don't know because it's a B2B company, right? This isn't something that's going to be consumer focused. Not to say B2B companies can't perform incredibly well. There's a large number of them that perform wonderfully. It's simply one that I'm not certain on how far it'll proliferate into consumerism, into mainstream consumerism because of their product offerings. So for that reason, I'm not going to be touching it as a long-term investment myself. I currently don't own any position. Now, if it comes down to this $20 range, maybe between $20 and $21, I'll consider taking a starter position there for a swing back up to around 23, quick 10% gain over a couple weeks, something like that. If I saw that it broke down and came back down into this $15 range, that's where things get a little more interesting to me. The risk reward for holding it long term seems a little bit better, where you could get some solid appreciation off of 15 as it moves back up into the 20s, 25s, but have fairly limited downside risk here, right? Like yeah, if it moves down to $8 again, you've lost half of your investment, but again, if you're looking at a long term, then I would just be averaging down at $8 a share or $5 a share if it happened to drop that far again. Other than that, there's not a lot to say about Palantir. So I hope this was useful to you guys. Please subscribe to the channel. We put out updates like this every single day. We do stock market analysis. We do all sorts of things about different individual stocks and a lot of how-to videos as well to help people learn the basics of what they need to do to just have the average everyday person become their own investor, their own financial advisor, their own stock trader, so that you don't have to pay outrageous fees to investment companies, and instead you can keep those fees and use it to continue investing in yourself and in your portfolio. Have a wonderful day, everybody, and we'll see you tomorrow.